But if you sell coin every day, you're effectively just selling at the market. We're one of the few places that puts their money where their mouth is, so to speak.
If you spoke with someone 50 years ago and tried to explain how the world looks today, they would look at you like you're pretty crazy.
Everything that we're doing in traditional finance is done better inside of the crypto universe. Inflation is here. Food prices are higher, gas prices are higher. I think that blockchain is going to do to finance what the internet did to retail.
We're in a crazy scenario where you have a tremendous amount of money printing going on.
People aren't going to stop thinking like, oh, the government says I shouldn't think about how to be better, so I guess I'm not going to do it.
I was at lunch with this one senator and a governor. Well, Jason, thanks for taking the time to come on to the podcast today.
Thanks for having me. This is great.
I've actually had the pleasure of knowing you for a few years now. I know that you previously had been at Drawbridge Lending and you've been making some big moves in the industry. So how about we just start by having you talk a little bit about your background, your journey into crypto, and then how that all led to what you're doing today at Galaxy Digital.
Absolutely. So, like a lot of people in the space, on the finance side, I started in trading. I spent about a decade at Goldman, ultimately running the index volatility market making flow business there. So think VIX versus variance and listed options and things of that nature. Left there in 2009 to go start effectively the same business over at DRW, which you would know in the space as the Cumberland guys, but DRW is the parent, and was there till late 17, early 18, at which time I founded Drawbridge Lending, which is a specialty finance business inside of crypto. So thinking about structured products and interesting ways of bringing traditional, financial, tools to the crypto space. And then that company was ultimately acquired by Galaxy Digital, and I came over here as the co-head of trading. How I got into crypto is kind of an interesting story. Obviously at DRW, having Cumberland and Cumberland being one of the first OTC desks in the space, I was at a dinner with traders, 10 traders going out, grab, a dinner one evening. And I was having a conversation, and the guy across the table from me, who was the founder of Cumberland, was talking to someone and said, "Hey, I just bought 200,000 ETH for a quarter." Now, when you're at a dinner with traders and somebody says, "I bought 200,000 of anything," I said, what did you buy? I stopped my conversation and said, "Hey, what did you buy?" And he's like, "I bought 200,000 Ether." And I said, "Are you a dentist? Like, what do you mean Ether?" And he said, "Ethereum." And that was kind of my, that was my first foray in. And initially, like a lot of people, I think in traditional finance, I was skeptical. And, I was like, well, what is this thing? And as I kind of started to learn about it, my opinions changed. I mean, one of the big things was, I think, and I'm a little bit older, but when the internet first became a big thing, I was like, who's going to buy their clothes on Amazon? And now I show up every day in front of my house, there's 15 boxes and, things of that nature. And so I said I wasn't going to make the same mistake twice, and started to learn about crypto. And as I learned about, more than just, hey, it's more than just Bitcoin. Although Bitcoin's an important part of it, I kind of jumped in with both feet, and that was when I started Drawbridge with some partners, and I've been going hard at it ever since.
I hope that you jumped on the bandwagon soon after you heard that he had bought 200,000 ETH
for a quarter. Not to that extent, unfortunately, but yes, shortly thereafter, I was, starting to dabble.
Yeah, that's great. Well, I remember one of the things that at least I've noticed in the space is how it's matured so quickly. And one of those moments that I think really stands out, I haven't had the chance to tell you this, was when I heard about your company and what you guys were offering. And that was really when I saw, wow, there are more institutional players coming into this industry. They're going to provide more opportunities for other companies, such as mining companies that are going to want to really have that industrial grade operation that institutions feel comfortable investing in. So with that said, could you talk a little bit about the product suite that you initially started and what that vision was at Drawbridge and how that's evolved over time to what you're currently working on today?
Yeah, absolutely. So the product suite at Drawbridge started with a very simple, what we call now a collar loan, where effectively we're taking an asset and we what we wanted to offer our clients was an opportunity to borrow money. And you have to remember, in the early days of crypto, people were charging 20, 25, 35% to borrow cash against crypto. And that didn't seem right to me. Like, it just, understanding the asset, the biggest issue was the volatility of the asset. And so, coming from a traditional space, I said, how do you eliminate the volatility, or at least mute the volatility, still giving the client some upside, but also allowing them to borrow money at a very low or very reasonable interest rate? And so what we started off doing was effectively buying a put at the price, at the LTV. So if Bitcoin was trading, go back in a world, Bitcoin was trading at $10,000, client wanted to borrow $7,000, we would lend them the $7,000, and we would buy the 7,000 put, and then we would find a call that produced enough income that we would sell, and that income would buy the interest rate down on the cash, as well as pay for the put. And what ultimately that meant was the client had a non-recourse loan, unlike, and there was no margin calls. And it also meant that the interest rate was zero. Now, the negative or the downside is that you have this call that kind of caps your upside. But if you're a miner, or if you're somebody that's going to sell anyway, this is a way to smooth your cash flows, because people would say, well, I hedge. I don't hedge because I don't hold coin. But if you sell coin every day, you're effectively just selling at the market. And so by timing this, it allowed our clients to have a better control over their cash flows. And it's a tool that it's used by farmers for their crops, for oil drillers, for oil. And so we kind of felt like this is just a natural extension. This is the same product used in a different asset class. And in doing that, we spent a lot of time working with Galaxy, among others. But, I think that Mike and the team here quickly realized that this was part of what they were building and what we are building here at Galaxy. And maybe it's helpful to kind of talk a little bit about, Galaxy when we talk about products and where we're going with this. But, we're trying to be a full suite financial services company in the space for institutional investors, for institutional participants. And to that extent, we have 5 business units that service that segment. So we have the trading business, which is the business that I co-run. And that's everything from borrowing, lending, spot execution, derivatives, on-chain staking, things of that nature. We have the asset management business, which is something that people see a lot of. We have a partnership with CI and other partnerships that are going to be announced soon, where we have funds and clients, institutional clients can buy those funds. We have an advisory business that helps raise money and helps with M&A activity in the space. We're trying to help these companies and clients with capital formation and really telling the story, because we do believe in it. We have a principal investments team, which works very closely with everything inside of the crypto space and tangential to the crypto space. And then the last piece is the mining piece, where we actually have miners, then we offer mining services, or services to miners, in the sense of whether it's financing or other ancillary things. So the company as a whole is smack dab in the the crypto ecosystem, and we're doing everything we can to build it to, we're one of the few places that puts their money where their mouth is, so to speak. Our balance sheet is primarily crypto. And so from that standpoint, that gives us a tremendous competitive advantage, not only in what we do for ourselves, but also what we do for our clients, because we bring that to their benefit as well. And as one of the second largest publicly traded company in the space, we give traditional institutional investors that comfort of a transparent balance sheet and the ability to at least look through and say, okay, what is actually there? Because I think so much with crypto is, you don't have the right to anonymity, but you have the right to privacy. But there is a layer of anonymity for a lot of firms when they look at, like, well, how much crypto do you have? Where is it? And so as people get comfortable with that, or until they get comfortable with that, us having a transparent balance sheet is very advantageous to them.
Yeah, I couldn't agree more. And one of the things that just personally I'm very curious about is how you think that this is going to evolve. And I think that you personally have a very unique background to this, because you did spend so much time in the more traditional world of finance. And 10 years at Goldman's a long time. Not very few people have that experience, as well as the experience in crypto and then building a company in this space. So the way that you see it today, How do you think that this is going to evolve moving forward? And what do you think that this industry is going to end up looking like?
I think that blockchain is going to do to finance what the internet did to retail. It's going to drastically revolutionize the way business is done, and it's business is done in financial services. The blockchain is such a great technology. It's so innovative, and there's so many ways that you can go as we start to see layer twos building on ones and layer threes on twos and things of that nature. If you think about what we have here, and we talk about it often here at the firm, is that, a layer one is the iPhone, the layer two is maybe the app store, and then all these apps are getting built on it. So if you're looking for parallels, and people like to kind of think that way, that's a good way to kind of think about where this is going. And so as we kind of dive into the space, I think it's going to, everything that we're doing in traditional finance is done better inside of the crypto universe, and everything from how you clear and settle trades to how you track information, who you permission where. There's so many advantages that crypto solves, and each of these blockchains solves a different portion of that inside of the whole universe. And so as we think about this, or as I think about this, and I think about where we're going, everything that we do today, from if you go to a bank to down to how you invest, how you buy stocks, how people, everything is on this phone, right? I mean, all these people, on the planet, the unbanked, can all now be banked here. And everyone that currently has a bank can still use this. And so, as we kind of push forward, I think that everything that you see, or every problem that exists inside of finance and financial services and things of that nature, anywhere that commerce takes place, can be solved here. And so it's only a matter of time as people become more educated, become more comfortable, and they start to understand, wow, this really isn't scary. This is actually pretty neat. And it's no different than when we first got the internet and you had the dial-in modem. And now look at it. There's 5G everywhere. The world is at your fingertips.
Yeah, I'm pretty sure that if you spoke with someone 50 years ago and tried to explain how the world looks today, they would look at you like you're pretty crazy. But it's just it's the exponential nature of technology, it seems like, and taking that and applying it to this industry, I think you're really seeing that begin to ramp up. So just taking a step back and looking at how you guys work with miners and walking through a scenario, for example, you guys have a lot of flexibility, it seems like, in terms of where you're putting those puts and calls and designing a customized solution. But if we were just to walk through an example of how you guys would work with a miner, obviously miners are minting new Bitcoin and they have to pay their electricity bills. They have working capital costs. If I'm a miner and I come to you and I say, hey, look, I want to make the most out of my treasury. And I have this type of outlook. I have a bullish outlook on Bitcoin. How would you work with that miner to help them get a solution that is tailored to their needs and helps them really maximize their treasury and pay their electricity bills and keep exposure to Bitcoin?
Yeah, I think that that's an important thing to discuss with respect to the mining space. I think one of the things, when you think about if you're a Bitcoin miner, you obviously believe in the asset. The goal, I think, is for people to have as much of that asset as possible and keep as much of that as they can. The other side of the equation is you're also operating a business, and operating a business means you have cash flow needs in other currencies, no different than multinational firms who might buy goods in China but sell them in the US, and they have to hedge their currency exposure that way. And you also have to be thoughtful about risk management, because if you're going to raise more money, or if you're going to be in it for the long haul, because it is a volatile asset, you have to think about how do you want to hedge and how do you want to mitigate risk. And so generally what we'll do is a client will come to us and they'll ask us for a variety of different solutions, everything from lending against the equipment, which has certain there are always certain issues that you have to solve there, or lending against coin that they've currently mined. And then when you talk about lending or liquidating on a regular basis, and then when you talk about lending and you talk about, there are really two loans that we'll offer. There's a few more varieties, but effectively you have what I'll call a margin loan. So, and that looks like what you see a lot in the space. Client will come in and say, here's 100 Bitcoin. Let me borrow 70 Bitcoin worth of dollars. So on a 70 LTV, that's pretty standard. The issue that you run into with that is when the market sells off, you have to either post more coin because you have to get your LTV right, or liquidate some of the coin to get your balance correct. And what that really has the effect of doing is forcing the miner to sell the lows, right? Because that's where they're reliquidating. So, but it also leaves the upside completely uncapped. The other side is the collar loan, where a client will come in and say, all right, I want to borrow that same 70 Bitcoin, and I'll lend that to them. And the interest rate is going to be structured to whatever rate they want. Say it's zero, because that's what most clients choose. We'll lend you the money at zero, advance it to you at zero, and we turn around and we buy a put at the 70% strike, and then we sell a corresponding call. What that means is if the market sells off, the loan is non-recourse. The client never has to sell more Bitcoin. The put is there as the insurance policy. And so they get to keep the money, use the money, and not be forced to sell more coin. Conversely, if the market rallies, when it rallies to a point where we've sold that call, they get all the income from today to that strike. And let's just say in this case, we're talking about a $10,000 Bitcoin price. What we'll do is we'll buy the 7,000 put and sell the 13,000 call. So the client gets everything from 10,000 to 13,000, but then above 13,000, they've now foregone the profit. The exchange is they took the money and theoretically bought more equipment or paid bills or did a number of different things, and they had protection to the downside. So as we kind of think through, a lot of clients choose a blend of both, and they say, I want some upside and I want the margin call, or I want some protection and I want a little bit of both. And they understand that, okay, well, if it goes from 10,000 to 13,000 in 2 months, I'd probably sell some up there anyway. Very rarely do we do have clients that are full-blown believers and they're saying, I'm never selling another Bitcoin. I don't care. I will hold it till the end of time. And that's a different risk profile. So that's kind of how that process works in terms of what we'll do with miners and how we'll work with them on the cash needs side, in addition to, a number of other services that we provide out of our mining division as well as out of our trading division.
Yeah, that's one of the things that I think is very important. And I really like about the structures, because a lot of times if you're holding the asset, you can go and you can access capital, or you can be liquid, access cash and post your Bitcoin as collateral, but you're always worried about the margin call and worried about that downside in such a volatile market. So I think that type of structure allows you to not have to worry about that downside, and you're able to sleep at night, so to say. Don't have to go and check the charts whenever you see things starting to crash. And then for that peace of mind, your upside is capped based on whatever LTV you're taking that cash in at. So I think that moving forward is going to be something that is a lot more important for miners who are trying to have a treasury management, risk management strategy.
I couldn't agree more with you. And the big thing that you have to think about is right now, the mining space, there's some, I'll call it slush, right? Like the profitability is pretty good, and you can have a little slippage and not negatively impact your corporate outlook. There is going to be a time when those margins collapse, hash becomes, difficulty increases, things of that nature, and you're really going to need to be focused on risk management. And it's going to be the operators in the space who take that step forward and use prudent risk management that are going to survive those wicked turns and be in a much better place, as opposed to the ones that kind of say, well, I'm going to ride the lightning and see what happens. And I mean, we've all lived through some wicked pullbacks. I mean, we've seen massive expansion, but we've lived through some, those days in, March, a year and a half ago, and things were cut in half. I mean, it happens. May of this year, things were, down, effectively cut in half. That does happen, and that does change your outlook as a business.
One of the things that I want to make sure we touch on is actually not directly crypto related, but just general markets. Right now, it seems like we're in a crazy scenario where you have a tremendous amount of money printing going on. You're seeing valuations in the markets that just seem really unheard of. If you had looked at just some of the events that have taken place on a macro scale the past couple of years and look at where we are today, it's kind of hard to wrap your head around everything. So just from the traditional sense, I mean, what's your view on everything? Like, how are you looking at this? What do you think? What do you think is happening here? And what do you think that path is moving forward?
I think policymakers, whether it's political or whether it's, the Federal Reserve, they're kind of in a trick box right now because with the absolute level of debt, if they raise interest rates to cool things off, as we see inflation starting to really become meaningful. Now, whether you want to call it transitory or not, inflation is here. Food prices are higher, gas prices are higher. Look at lumber at the beginning of the year. Now, granted, there were some other issues there, but you look at prices of things and they're higher. There is inflation. And with the level of debt that we have, every quarter of a point that the Fed raises rates, well, that means we have to pay that. So where does that money come from? You can't raise rates to, you're handcuffed a little bit. And so now it becomes the issue of, well, how much do we raise rates versus printing money and so on and so forth. Even if we do raise rates, we have to service that debt. Now the service payment goes higher. I read somewhere, and I don't know, I didn't verify this, but that the interest paid on the national debt in 2000 is actually higher than the interest that we currently pay because of the actual level of interest rates. And so as you kind of look through that, there's money printing. And it's going to continue to be a nice tailwind for crypto. I think that we all need to be thoughtful and disassociate the speculative nature of things versus the utility nature of things and the asset class nature of things. But the reality is it is a tailwind for our business, and it's a tailwind for the whole crypto ecosystem, because it's just going to make it easier for this innovation to happen more quickly, and adoption will ultimately take hold. And I think that's really we're finally seeing with the client flow that we have, real people. And I say not that you and I doing this for the last 5 years weren't real people, but when a hedge fund or a pension fund or a large endowment shows up and wants to transact, they're transacting differently than how people would normally do it traditionally in crypto. I think if you think about crypto, it's historically been 80-20, and every market in the world is 80-20. The difference is crypto is 80% retail, 20% institutional. That pendulum is swinging to be more like every other traditional market, where it's 80% institutional, 20% retail. Now, does it ever go to full 80-20? Maybe not. I don't know how quickly, but it's certainly moving towards 50-50. And that's again another tailwind, another thing that you can look at and say, the long-term story is very positive for the asset class.
It's interesting hearing you talk through it, because I remember leading up to that liquidity crisis in March of 2020, there was all this talk in the crypto, I don't know what you even call it, but just the discussion in crypto with people saying the narrative that has really started to take hold following the liquidity crisis, with this entire stimulus going and money printing and money flowing out of the traditional centralized financial system, so to say, and into the crypto universe, the decentralized financial system, and really capturing that type of narrative. It's been interesting to see that evolve over time. In terms of where it is today and what you're seeing on the client basis, when you're speaking with these endowments and everyone else, are you getting a general sense of how they're looking at the space or how it's changed? Is there any type of difference today than just a handful of years ago?
Absolutely. And the biggest difference was it's always about risk. And the risk used to be crypto could be a career killer, right? If I invest in crypto and then something happens, I'm screwed. Now it's a career killer the other way. If I don't get in and everybody else does, now I'm screwed. And so it's that FOMO on that side. And adoption is different. I mean, that's one of the things that, here at Galaxy that we do well is educate, traditional clients, educate people to doing that, understanding and being comfortable with it. We get questions, and it's the full gamut. It's from, people who are, as new and as green as you can be to people who are understanding minute differences and really, that. And our job as a firm, and I think we do this very well, is to basically be that tour guide all along the way. We see clients who first come in and they'll buy a little bit of Bitcoin. And then, maybe it takes them, let's just use a number, a year to get there. Then it takes 6 months to go from Bitcoin to ETH. And then once it's ETH, now I'm fielding calls like, I really want to get into this DeFi protocol. Or what do you think about, this layer one and this, like you start to kind of, the game is changing. And it's really because the space has been de-risked from an asset class perspective, but it's also been, the risk is now not doing anything. That's where people start to say, well, geez, if everybody else does it, my boss or whomever I have to answer to is going to say, well, why didn't you buy some of that? So we're definitely seeing that. And it's our job, at Galaxy, that's why we do what we do. We create those outlets for people to get in, connecting to all the exchanges, doing all the, understanding the custodial landscape and how best to navigate through that, as well as the legal reg landscape. I mean, that's the other thing. There's not a lot of, the one thing I think that holds us back now is lack of regulatory clarity. If we get that, I think you're going to see it, the floodgates will open. Just needing to know what the set of rules are and not knowing what the defined rule is makes it difficult for, people to sit there and say, I'm going to put, I'll put $1 billion in. They say, I might put, 10 million in, 20 million in, but I'm not going to make a major allocation. When we get some rules, I think you'll start to see some big allocations.
Yeah, that's another big piece where you look at what's happening in China and what just happened to the miners in China. It can have extreme ramifications if you allocate capital and then some sort of legislation changes or they provide additional clarity on something that could threaten the business. I mean, granted, when you're a policymaker and you're trying to regulate such a new industry, it can be very difficult. You want to make sure that you're doing it safely and doing it in a way where you're achieving the goals that you set out to accomplish. But from your perspective, what I'm wondering is, what are some of the things that from a policymaker perspective, let's say that you have their ear right now, or you're speaking to one, what are some of the areas that you think are very important to provide additional clarity on and things that would really help move the industry forward in the US and help innovation rather than just hindering growth unnecessarily?
Well, I think we saw it play out a little bit with the infrastructure bill. There are so many areas that we need some definition, and trying to take a set of laws and rules that were written 100 years ago, with the 33 Act, the 34 Act, and trying to apply them in a space that technologically is so different. We need to have real thoughtfulness around it. And we can't operate from a place of fear, because we don't want to overturn the apple cart, but actually operate from a place of innovation. And as you think through what that means, is failure to act from a place of innovation means you're just going to force all that innovation offshore. People aren't going to stop innovating. People aren't going to stop thinking like, oh, the government says I shouldn't think about how to be better, so I guess I'm not going to do it. Like, that's not going to happen. It's just not going to happen here. And that's one of the things that's made the United States such a great place, is that innovation does happen here. And so if we don't embrace rules and regs that reward innovation, well, we're going to have an issue. I think that, some specific things, thing that I deal with all the time, is this a security? Is this not a security? And how do you handle it if it is a security versus, not? Is it a commodity? The Howey test, it has some advantages because it does give at least some framework, but there's also a lot of areas where it doesn't really take it to the level it needs to. And so that's a conversation that we have here and take very seriously at Galaxy. And it's quite frankly, one of our advantages to our clients is that we take a very thoughtful stance to all these assets and say, all right, you can trade this here, or you can trade this there, or if you want to trade this is the legal way to do it, not just the hold your finger in the air and hope. And if you're a real traditional institutional player, you want to know, like, what should you do? And that's kind of where we come in and say, you should do this. So I think on that front, definitely regulation and what is available to the space, the policymakers need to basically get their act together. That's really what it comes down to.
I'm not going to lie. I was very disappointed when I saw the infrastructure bill's language and then the amendment not passing to change that. And actually recently came out with an article on Cointelegraph giving an analysis from a miner's perspective. Because right now, the way that it's written, I mean, effectuates the transfer of digital assets seems overly broad and pretty ambiguous. And I think that that's one piece where I think it's very important to have people and policymakers who are out there speaking about it and understanding the technology that they're voting on. I mean, I even saw this photo of this guy carrying the entire infrastructure bill, like with his two arms out here, and it was just this stack of paper. And I'm thinking, there is no way that a single person who's voting on this bill has read the entire thing, because that would just take so long to do. And even if they did and tried to spend all day, every day working, like, let's say 100-hour weeks to try and understand the things that they're voting on and read the entire thing, they still wouldn't have the capability to do so. So as you mentioned, just taking these frameworks and things that were from so long ago in the 1930s or whenever it was, and applying it to the fast exponential nature of technology just seems like something that is not going to work. And so it's going to be interesting to see how this all plays out and what actually ends up happening.
I'm hopeful that we will figure it out. But we still also have to be, cautious, and it's incumbent on all of us in the industry to one, educate, to embrace, to try to help shape people's thoughts around it. Cryptocurrency isn't this thing used for money laundering and human trafficking. It solves exponentially more problems. And yes, there's a bad use case over here, but that's not what defines it. It's defined by all this good, not these one or two bad things that people think it is.
Yeah, definitely. And as you mentioned that, I'm very glad that narrative has thankfully begun to disappear. The whole thing that it's only used by, for money laundering and illegal activities. I remember this was actually a number of years ago, when it was in the much earlier days when you didn't really have the institutional activity that you had today. This was before March of 2020. I was speaking with I was at lunch with this one senator and a governor. I will not say the state right now, but I was trying to explain to them the importance of Bitcoin and how this technology is going to change the future. And one of the first questions that they asked was, well, how do you stop it from being used for illegal activities? Isn't that what it's used largely for? Thankfully, I had the chance to go and explain the whole situation around it and kind of debunk that right in front of him. But it's one of those things where these are busy people. They don't have time to go and understand the technology. They're just reading maybe a handful of headlines and doing like a few hours of internet research. And with all the information out there and so much misinformation surrounding that industry at the time, it's something that we're past that hurdle, but now it seems like we're onto another hurdle where we have to have these types of discussions around it and really talk about smart regulation. I mean, as you mentioned, we don't want to push all that innovation offshores and miss out on the revolutionary technology akin to the internet. I mean, that would just be like snatching defeat from the jaws of victory when you're sitting in the place of the United States.
Yeah. You're absolutely, and financial evolution has happened everywhere, and you see it, going back to the Dutch were the primary, banking center, and they didn't embrace regulation, and that moved offshore to England, and then England became the banking superpower, and then ultimately that moved to the United States, and it's innovation that's the driver of that. It's not, when you play the game not to lose, you inevitably lose, right? And so that's the goal for all of us here is to keep this with us onshore.
Yeah, definitely. Well, I've got one more question, but before I ask it, is there any place that anyone listening, let's say that they're a miner, an institution, someone who's running a company in the space, and they've heard what you guys can offer and think that it would make sense for their business to help it grow and scale, where should they go and try and connect with you or the company to learn more and speak more about it?
Our website, galaxydigital.io, is always a great place to go. Obviously, you can reach out to me at jason.urban@galaxydigital.io. And more than happy to direct people to the appropriate resources inside the firm. At the end of the day, but I think it's incumbent on anybody in the space to help educate, because I think that you can attest to this. We all are very collegial when it comes to this, right? Like there are things that I say, well, I don't do that, but go talk to so-and-so or such and such. So I think that, when you reach out, you'll find the best actors and your reputation does follow you. So we try to take that very seriously here as well.
Yeah, that's great. Well, last question, and you can approach it however you want. What is the one belief that you hold to be true that the majority of people would disagree with you on? That could be crypto related, obviously. It could be industry related.
I think one of the things that's important, and it's treated me well throughout my career, is to be thoughtful about your beliefs and to be willing to challenge them and reevaluate what they are. I would say one area where I have flip-flopped in recent times is the concept of NFTs. And I know that's the new thing. And there's people that say it's a bubble. Some people, and there are aspects of it that look a little frothy. But when you step back and you look at it, and I was having a conversation actually down at Bitcoin Miami with somebody, and my comment was, listen, I think NFTs are like, digital baseball cards. They're just not going to be in your mom's basement. They're going to be on a hard drive that you find in a drawer 50 years later and say, oh, look at what I bought. The point is that the counter argument to that was, this is a way to monitor and monetize every form of information. Medical records will become NFTs. And to the extent that it is art and it is media, those images will be there forever. So at some point, it's a way, one, for the creator to own a piece of it, to own a piece forever. And it's also a way for the investor to transact. There are points of this that, yes, the technology today isn't necessarily there for that, but it will be there. And it definitely changed my view, where I went from, it's a digital baseball card and, I got my, my Roger Clemens rookie here, to saying, wow, you're right. You know what? This is going to change the way everything is done. So I think that's one area where having an open mind and asking questions can get you to look at things through a different lens.
Great. Well, thanks again for coming on. Really appreciate it.
Thanks for having me. It was really a pleasure to be here.